Morning folks, BA here, and what I'd like to do this morning is just give you a quick recap on all of our strategies, just to show you how things are working year to date, and also since the inception of most of these strategies. So it's January 23rd and early morning. So let's get right to it, and we have two main categories that I want to just highlight for you. And the first one is our trade like a hedge fund manager strategy, which encompasses these three portfolios. And then we have the swing for the fence strategy, which we started with 25,000 here in this account, and then we're going to start with 5,000 in this account. So more about that in just a moment. Alright, so let's get back to let's get started with the retirement account, which is in the trade like a hedge fund manager strategy. So in the retirement account, since inception, since I started tracking this real time for the public, we're down 3.94%. Alright, so you might be saying, wow man, that's lousy. In 8 months you're down 4%. Well, yeah, it's because we are short the stock market via call spreads, and we're only 45 points away from being up 50%, in this account. So when the stock market gets stretched for a long period of time, that's when I typically have the drawdown in the retirement account. So you can see here our objective is 4% a month. That's how we typically structure the strategy, but we're down 3.9% in 8 months. So a 45 point drop in the S&Ps, which is really nothing the way this market is, and this account's up over 50%, in 8 months, and we can get that in a day or two's move. So we're not really sweating that. All right, so in our portfolio margined account, we started with tracking with $100,000, and we're up roughly 37% in almost 4 months. So that one's tracking just the way we want it to. Large account, this is an account here where we started with $1 million. Our objective was 2% a month. We only are going to trade the S&P 500 futures with strangles and directional call and puts, naked calls and puts. So what we want to show here is just that we can trade one symbol 2% a month and do very well with it. So you'll have to read a little bit more about how we structure these portfolios. But this is just a recap. Swing for the fence strategy, the $25,000 account. In 5 months, it's up almost 60%. So we're tracking right along in that account. We've had one drawdown in it. Had one 2-month period where we didn't do anything at all. If we had even made a profit in that 2-month period, and again, I want to draw your attention, we've only been trading this publicly for 5 months and we're up 60%. But if I wouldn't have had that rough 55-day period in crude, this account would already be up 75, somewhere between 75 and 90% in 5 months. So we're going to take the same strategy I've used for years and years to double accounts, and we're going to apply this to a $5,000 account. So I've got the account almost cleared to fund, so I should get started trading that within the next week and a half to 2 weeks. So anyway, hey, that's just a quick recap on our portfolio stats, how we're doing, and that's all I have for this session right here. So this is BA signing out.